Things are looking grim for Greece and its creditors. The Deal's Jonathan Braude joins us from London with more on that. Jonathan.
Yes, good morning, Jane. Continental European markets fell this morning as worries continued over a looming Greek default on its payments to the International Monetary Fund next month. The Athens General Index was actually in positive territory this morning, but Greece's cost of borrowing is now approaching a record high of 27%. In London, the FTSE 100 had been bucking the trend, rising strongly on news that UK unemployment fell to its lowest level since July 2008 in February. The jobless rate was down to 5.6%, yet Britain still recorded 0% inflation. But that was before a global outage of Bloomberg terminals forced the UK Debt Management Office to postpone the sale of $4.5 billion worth of short-dated bills. At that point, London joined other markets in the red. Aircraft engine maker Rolls-Royce Holdings flew up 1.4% on the announcement of a $9.2 billion order, its biggest so far, from Middle Eastern airline Emirates. Budget carrier Ryanair lost altitude as a British competition tribunal provisionally upheld an earlier ruling that the airline must cut its 29.8% stake in Irish rival Aer Lingus to 5%. Ryanair fell 1%, while Aer Lingus gained 0.75%. But British Airways owner International Consolidated Airlines, which wants to buy Aer Lingus, also lost a little height. It fell about 0.1%. In Germany, car maker Volkswagen rose nearly 3% after announcing a strong global sales in March. But it warned that for 2015 as a whole, such performance was not guaranteed. While associated marques, Audi, Porsche, Seat and Skoda were all up, Volkswagen's own brand auto sales were down. And the future was looking particularly difficult in its biggest market, China. That's all from me. Back to you in New York, Jane.
That was Jonathan Braude with The Deal in London.